Okay, Nate, we are live.
Great. Hey, everybody. Thank you for joining us on this Wednesday morning. My name is Nate McGaha. I'm the Executive Director of Arts North Carolina. And today we are going to be doing a summary, kind of dive into the new federal arts relief bill that passed Congress on very late on Monday night, and is still waiting to be signed by the president. We might talk a little bit more about that later. First, before we get started, I want to do a big thank you to our Arts Day sponsors, which now are our Arts North Carolina sponsors. We're going to be celebrating them moving forward all year long because they're really supporting our program all year long. And we are so very grateful to certainly our Arts North Carolina members, but additionally to those sponsors that make an additional investment for Arts Day and to support our work all year. So thank you to those great sponsors. Just for those of you that may be new to Arts North Carolina, or to my webinars, I put a lot of information. You're going to see a lot of words in the slides. So if you don't catch what I'm saying, we are recording it, making it available on our website. And then, of course, it'll be backing up a recording on Facebook as well. But there's a lot of information written down. Also, you can download the slides at our website, and there's links. All those blue letters are links, so please feel free to use those. Arts North Carolina obviously been very, very busy in the COVID-19 response with service as well as advocacy. I'm not going to go into too much detail here, but I encourage you to check out all of our resources, both around our training and our opening resources, the guides, the publications we've done, as well as all of the advocacy we are working for relief and reopening at the state, federal, and local level. So I also want to, before we dive into the new relief legislation, just an update on where we're at. Reported losses in North Carolina are at coming up on $89 million with over 6 million lost attendees. This number is small, right? We know that because we've all kind of had a little bit of survey fatigue. We're not reporting as much as we did in the beginning of the pandemic. But just to kind of understand the scale of the crisis that we're dealing with. Also, I encourage you to hit the link here for the Brookings Institute report. It was a snapshot of April through July of 2020. Some really interesting information about the economic impact on the creative industry, and with the creative industry broken down to North Carolina, and with a breakdown of the fine and performing arts sector. But the real thing I want you to walk away with from this is that if you apply that to the North Carolina arts nonprofit sector, we're looking at, in just that 4 months, we're looking at an estimated $100 million, right? So we're more than 8 months into this. So we're talking about $200 million in losses, if not more, just on the nonprofit side, and very possibly as many as 20,000 people in our sector out of work. So something really, so this is why this relief legislation is so important. So I want to dive in. This is the federal arts priorities Arts North Carolina has put out since about July. I think we put them out for the first time in July. This was really what we were working for the last 6 months. Number one being COVID relief for state and local government. So key because the money the state and local governments had so far, they could not backfill their losses. And that's going to, we're really concerned about that moving forward in terms of how the state and county can operate. Trying to get more relief funding through the NEA and NEH. We had 75 million in the CARES Act. We were hoping to see more relief funding. Second round of Payroll Protection Program loans. The first round was very impactful. It ran out a long time ago. Obviously, we're hopeful for that. Save Our Stages Act, when it was introduced, was $10 billion aid specifically for-profit and nonprofit live performance venues. We wanted to make sure that the $600 a week was extended, past July 31st. Obviously that ran out, but we've been working for that for the last 5 months to get that back. Mixed Earner Pandemic Employment Assistance Act, trying to get those people who get wages and some 1099 contract work or self-employed work, so that their unemployment was fair, and to expand that $300 universal charitable deduction from the CARES Act. So those were the things that we were working on. A few months ago, we did an update of where we were in terms of Democrats and Republicans. Obviously, there was a lot of Democratic support for our priorities in the HEROES 2 Act. Everybody was really behind that second round of payroll protection loan. So we saw that in both Republican and Democratic legislation. The Republicans actually were supporting the universal charitable deduction in the legislation that they were discussing about a month and a half ago. But obviously, this is not the news of the day. We're talking about this giant bill that came out this week, and that is not only a federal relief bill, but it is also the budget for fiscal year 21. So that's the federal budget that runs through September of 20 through September of 21. You can see a lot of our priorities were included. So I will say the thing that was not included in this, that was one of our priorities, was the relief for state and local government. This may very likely come up after the inauguration in the next Congress. So I don't think this is completely lost. A little bit of an update here in that because North Carolina has been unable to pass a budget that the governor hasn't vetoed, there's been a lot of dollars that have gone unspent. As such, there's about $4 billion heading into our next budget cycle that has been unspent. So state government has a little bit of padding to weather a storm. We're in a much better position than most other states are. However, local government does not have that level of padding. So we're still very concerned about that. We did not see any relief funding through the NEA, but we did in fiscal year 21 see a $5.2 million increase in their budget, moving them up to $167.5 million for both the NEA and the NEH. So we're excited about that. Second round of Payroll Protection Program loans. We're super excited about that. We're going to go into a little bit more detail about exactly what that means and what you need to do to qualify. Save Our Stages Act. So much more than what we were hoping for. And this is really the big story in the arts community right now. Not 10 million, but 10 billion, but $15 billion for profits and nonprofits, and not just performance venues, but performing arts organizations and museums and a few other entities as well. And we're going to dive into that in a few minutes. On unemployment, we didn't get the $600 back, but we did get the $300 back from the federal pandemic unemployment compensation. That's going to be $300 a week added to all unemployment benefits caused by the pandemic between December 26th and March 14th. But we also got an 11-week extension on other federal programs, and we'll go into more to that next. As well as the mixed earner, we didn't get the mixed earner act that we were looking for, which would have been more comprehensive for those making both wages and 1099 work, but we did see some movement in that direction, as well as an extension and expansion of the universal charitable deduction from the CARES Act. So we're going to dive into that, and we're going to start with federal unemployment assistance and what in this new bill is specifically changing in terms of federal unemployment. So the PUA, which is, as you know, for self-employed and independent contractors or gig workers, a lot of times is for those that were unemployed because of the pandemic and who are self-employed or independent contractors. There were 39 weeks of benefits in that program that was set to expire at the end of this year. They're expanding that by 11 weeks for 50 possible weeks in the PUA program. So that I believe that the way that that's worded in the bill is they're going to stop the program on March 14th, but they'll continue taking claims on the program if you have additional weeks left through April 5th. So really, ostensibly, claims through April 5th will be paid out by the Pandemic Unemployment Assistance Program. So really glad to see that. $300 a week added to all unemployment benefits across the board, whether it's PUA or PEUC or state benefits. Everything that's getting claimed is getting an additional $300 from the 26th of December through March 14th of 2021. So not the $600 that we had, but we at least were able to see that increase. We know a lot of folks are unemployed right now and are in need of those benefits. Pandemic emergency unemployment compensation. This is a little bit more complicated, particularly in North Carolina. Most states have 26 weeks of unemployment. I mean, almost every state has 26 weeks of unemployment. We have 12 weeks of unemployment of state benefits. So we are now going from having an additional 13 weeks added on to the 12 by the federal government to having an additional 11 more, moving us to 24 weeks. So that you have your state benefits, then 24 weeks of PEUC, and then we'll talk a little bit more about extended benefits and what that means. Again, the program's going to run through March 14th, but if you have benefits left within this program, they'll continue to pay out those weekly benefits through April 5th of 2021. So the mixed earners I was talking about a little bit before, this is a little bit of a win. They're not as much as that we were hoping. And what that means is that if you can show, if you're claiming unemployment through your state benefits or through PEUC, and you're on your wages, but you also have at least $5,000 in self-employed income, then you can get an extra $100 of the added to your FPUC. So that you can have a little bit more money to help make up for that lost revenue. And that's for anybody that can show that they earned at least $5,000 on their most recent taxable year in self-employed income. Extended benefits is it is addressed in the new legislation. Touch on this a little bit. It's very important in North Carolina because so many people have already run out of state benefits, run out of their federal benefits, and are now on an additional federal benefit, federal extended benefits of 6 weeks. And what was addressed here is that if you have started into your extended benefits through on your unemployment, you need to continue out until you run out of your extended benefits before you can go back and start claiming the pandemic, the PEUC benefits, the additional 11 weeks of PEUC. So keeping in mind that all of this is going to be handled by the North Carolina Department of Employment Security, and that so it's not going to be something that everybody has to know exactly what's going on. Continue to look to DES as a resource moving forward. Other big news for nonprofits is that because of the CARES Act, the federal government was covering 50% of any and all expenses that an uninsured nonprofit, a nonprofit that didn't have unemployment insurance, those expenses. Federal government was covering half of those. The state government was actually covering the other half. And the state of North Carolina seems to be very willing to continue to do that. That program is going to continue on by 11 weeks. So those nonprofits will not be paying those additional unemployment costs, which would be devastating. So moving on to the Paycheck Protection Program. So they put $284 billion into this program, which allows more money for people to get their first round of PPP if they have not yet done so. But most importantly, allows for a second draw from the Paycheck Protection Program. Entities with less than 300 employees that can show a 30% reduction of revenue on any calendar quarter of 2019 to the same calendar quarter in 2020 can get that second Paycheck Protection Program loan, up to $2 million. So there is a cap on that. I will say that I've gotten the question before about whether or not you can choose 12 weeks to be that calendar quarter, and the way the legislation is worded, it looks pretty specific that they are talking about a January to March, April through June, July through September, October through December, right? So specifically quarter 1, quarter 2, quarter 3, and quarter 4, those calendar quarters, and not just any quarter within there. So you've got to be able to show a 30% reduction from 2019 into 2020. Though you might not be wanting to get the Paycheck Protection Program loan, and I'm going to get into that in a minute. They've also expanded forgivable expenses, including everything that was already that you could already get forgiven, but now software or cloud computer that you would cloud computing services that you might use for business. Property damage caused by looting and riots in 2020 that weren't covered by insurance already. I think this was in response to some of the protests that we saw earlier in 2020. Supplier costs that are necessary for business and a little bit more expansive than what was there. And any facility modifications that you may have made specifically to address COVID-19, you can use for that, whether or not that's putting up plexiglass barriers or putting in a drive-through window, things of that nature that you may have done to specifically address COVID-19. Most folks on this call are nonprofits, so this won't really apply, but your gross taxable income does not include your second PPP loans or the first PPP loans actually. So and we're going to see that a lot is that that the revenue from this program is not included in your taxable income. That's PPP as well as any other federal dollars from this relief. Also, for those of you that that may have gotten a PPP loan of less than $150,000, they are streamlining the program. So sometime in the next month, the Small Business Administration is required to put out a simple one-page document for forgiveness that is only going to require the number of employees that you were able to retain because you got the loan, the estimated amount of the covered loan that got spent on payroll cost, and the total loan value. So it's going to be a really simple form, name, rank, serial number, and then just some basic information, and you're going to get that loan forgiven. So we're really trying to streamline that process. And most importantly, is that there have been 25 billion of this that are set aside specifically for small businesses with 10 or fewer employees. So kind of taking care of the smallest of the small business, making sure that there's money set aside for those, so that the larger businesses don't take all the dollars of the 284 billion available. So I know that this is probably the program that most people are interested in. The technical title in the bill, I think, is the grants for shuttered venues or something of that name. But this came out of the Save Our Stages Act that we've all been looking at and talking about for a really long time. So working title I'm going with is the Save Our Stages grants. $15 billion in funding for this program, which is, you know, a lot of money, but there's a lot of need out there. So kind of dive into who are we talking about, right? Who is capable of getting these Save Our Stages grants? For-profit or nonprofit entities that operate or promote a live performance venue. Government-owned facilities can also apply for this as well. Performing arts organizations are included in this. Museums as well as talent representatives. So talent agencies are included in this. They haven't had any work either. Theatrical producers and independent movie theaters, right? So I think it's really important. We're going to get into this. This was all for independent entities and individuals. In order to be eligible, you have to have been operating before February 29th of 2020. And you have to be able to show a reduction of at least 25% of your gross earned revenue from any calendar quarter in 2020. Calendar quarter, again, as we were saying, you're not just any 12 weeks, but a specific calendar quarter, a 25% loss from 2019 to 2020. That's the bare minimum of loss to be eligible. And you also have to either be operating now or open, or at the very least that you intend to operate in the future. So you can't get this grant if you have, you know, gone ahead and gone out of business. You have to continue to plan to be operating moving forward. This is the next note. This is a little bit of a bone of contention. It does say in the bill that an eligible entity that receives a Save Our Stages grant may not receive a second PPP loan. But what it doesn't say is that if you receive a second PPP loan, that you can't receive a Save Our Stages grant. I know that sounds a little like we're just getting in the weeds, but when you're dealing with federal legislation, the words matter. So we're going to be waiting for some clarification from the Small Business Administration about exactly what that means. So you might want to hold off on running out and applying for a second PPP loan. Eligible entities cannot, and these are things that you cannot do and be eligible, is you can't be publicly traded on a stock exchange. You can't get more than 10% of your gross revenue from the federal government. You can't do porn, right? So this was actually not in the bill that I was reviewing a week ago. This week they've added it in there. So any services, merchandise, or excessive sexual nature of the performances would disqualify you. And you can't have more than 2 of the following 3 characteristics. You can't have venues in more than 1 country, venues in more than 10 states, or more than 500 employees as of February 29th. So those are the kind of the cannots of the eligibility requirements. So who else is eligible, right? So diving into the live performance venue, the performing arts organization, and the producers in this section. At least 70% of your earned revenue, okay? And we go back and forth here, we're talking about gross or total revenue versus earned revenue. So for this qualification, 70% of your earned revenue has to be from tickets or admission charges of some sort, production fees or production reimbursements for live events, concessions or merchandise at those events, or other nonprofit educational activities, right? And know that they did not get into a large definition about what a nonprofit educational activity is specifically. We're going to be looking for SBA guidance from that as well. So at least 70% of your earned revenue has to be from these specific revenue sources. You have to market your events through print or online media, sell tickets in advance, and sell tickets, right? There has to be some kind of admission or fee paid for the event. You've got to fairly pay your employees. You can't just, hand $5 to an all volunteer theater group and say, we paid our employees, right? They need to be fairly paid staff and performers. Really we're just defining what a professional theater company is, or producer or performing arts organization. That you must have a clearly defined audience space and a performance space or a stage, right? So we have to be able to really walk into this venue and understand here's where the audience is and here's where the performers go. You have to have at least one person doing at least two of the following jobs: sound engineer, stage manager, security personnel, box office manager, booker, or promoter. So something that most folks, certainly most performing arts centers have a sound engineer and a stage manager working for those live events. Just kind of defining that. And the use of certain equipment, including mixing equipment, a PA system, and a lighting rig. So this is sort of how they're defining a professional event within this category. Museums. Now this is the only category where the museum has to be a nonprofit entity, right? So you cannot just set up your bottle cap collection in your living room, charge admission, and then be eligible for this loan. It has to be a nonprofit museum. It's your principal business to have indoor exhibits that you could not open because of pandemic restrictions. And also, and this is going to be the catch for several museums, that you have to have some kind of auditorium or theater, lecture hall that has fixed seating and regular programming. So if you've got if you don't have a space with fixed seating that you're programming on a regular basis, then you're not going to be eligible for a Save Our Stages grant. For talent agents, you got to make sure that 70% of all your operations specifically goes to representing professional artists that do live performances. So this is not for talent agents for movie actors and TV actors. This is specifically for those talent agents that are representing live performers, that are doing performances in live performance venues. Movie theaters. This is definitely also going to be taking care of our independent movie theaters, and they just need to post their show times either electronically or in print, charge admission, have a projection booth, a seating area, and at least one screen. And so that's really the eligible. Those are all the entities that are eligible. A few notes on calculations as we're moving into this. Full-time equivalent employees under this act, as you're trying to figure that out, if a person works more than 30 hours in a week, they are counted as one full-time equivalent employee. If they work between 10 and 30, they're half of a full-time employee. And if less than 10, then they do not count at all. So that's the calculation you've got to be using. CARES Act funding is not something that you need to calculate in your gross revenue. And when I say CARES Act funding, that means PPP loans or money that you may have received through the North Carolina Arts Council that the NEA gave them for those grants that were between like $2,500 and $7,500. So that does not count into your gross revenue. Or if those dollars, that the 9.4 million that's been distributed out throughout the state, that is also CARES Act money. So that would not be counted towards your gross revenue. So or if you got a grant directly from the NEA or any other CARES Act funded grant, that those dollars do not count towards your total revenue or your total gross revenue as you're calculating this. Got to use accrual accounting in order to determine all your revenue. And for those people that are seasonal employers, the bill gives the Small Business Administration the authority to come up with an alternate method, understanding that some of the dates in here are going to be a little different. They may say pick 12 weeks that's your most revenue. It doesn't specifically design it, gives the Small Business Administration the authority to come up with some special measurements for seasonal employers, understanding that that they might not necessarily fit into all these categories. So now the thing about the $15 billion is a lot of money, but there are certainly entities that are harder hit than others for a variety of reasons. And as such, worked into this bill is kind of a three-tiered system of priority. The first, so once they start awarding grants, once the SBA starts awarding grants, only the ones that get grants that'll be awarded grants in the first 14 days basically are going to be your 90% loss of gross revenue folks. So they're going to be measuring that between April 1 and December 31st. So that's your period that that more or less basically 3 full quarters of the year you've got to show in order to get the first 14 day that your entire revenue, that includes donations, has went down by 90%, that you're only showing 10% of your 2019 versus your 2020. After that, in the second 14 days, same thing, same period of time, April 1st through December 31st, you'd have to show that you had only 30% of your total revenue in 2020 or a 70% loss in that gross revenue. Again, that's all revenue that's being counted. So this is obviously going to go to probably more for-profits that could not solicit donations during the pandemic and couldn't have that that to sort of fill any of their losses. But then after that 14-day period, we get to open it up to all the other eligible entities. So I know that there might be some concern that we might be run out of money by that point. Keep in mind that first, SBA can only award 80% of the total funding in that 28-day period. So there will be something like a minimum of $3.5 billion left over, and there's only one letter difference between million and billion, but there's 3 zeros. So this is a lot of money that we're talking about. So I don't want people to think that it's all going to be gone, but this is just to make sure that that there was at least 20% of this $15 billion available to be distributed after the 28-day priority period. Also, the SBA is tasked to make sure that $2 billion of the $15 billion goes specifically to entities with fewer than 50 full-time employees. Now, that $2 billion can be spent either in the priority period or after the 28-day priority period, but at least $2 billion have to go to the smaller entities. And that no more than 5 affiliates of any one individual or entity can receive funding under this grant. So that's the priority. So now the big question is, how much is this grant going to be? It's going to be the lesser of two things, either 45% of the gross earned revenue, right? So that's all the revenue from education programs, ticket sales, merchandise, that earned revenue piece, 45% of your 2019, or $10 million, whichever is less. I'm thinking most of us are going to be seeing the 45% of earned revenue from 2019. If you began operations after January 1st of 2019, then they're going to prorate it, right? So they'll take your average monthly earned gross revenue by the number of months that you were in operation in order to come up with a number that works for your grant amount. There is going to be a chance for additional grant amounts after the initial grant amount. This will be later on, specifically for those that can show in the next quarter, right? So this is not going to be something that they're going to be granting out when they first open the grant amounts. But for those entities that are continuing to show a loss of 70%, right, 30% of their revenue between January 1st and April 1st, or between January 1st and April 1st, compared to January 1st to April 1st of 2019 compared to 2021, those 2 quarters, if you're showing a loss, then you can apply for an initial grant that would be equal to 50% of the initial grant, right? The supplemental grant equal to 50% of that 45% of gross revenue. And so, the only other stipulation that's in there is that if you add those 2 together, you can't get more than 10 million. So really there's a hard, fast line that says that they do not want more than $10 million going out to any single entity through this grant programs. So now you got the money. What can you spend it on, and when can you spend it? It can be used or attributed to any expense starting March 1st, 2020, all the way through December 31st of 2021. So we're talking about almost 2 solid years that you have for those expenses to incur with. The additional grant, you've got an additional 6 months. So you get that grant, you've got until June 30th of 2022 to spend those dollars. Now, a lot of the allowable expenses really are identified as everything that you could spend a PPP for, right? So payroll, equipment, rent, insurance, worker protections, most mortgage payments, not all, and I'll get into that in a second, utilities as well, but the things that they added onto that are things like advertising, travel, and capital expenditures for the very live performances that they want you to do. So if you're going to be mounting another tour or getting another production together within that within the expense window, you can certainly spend these dollars on that. The things that you cannot spend the money on, you can't go out and use it to buy real estate. You can't spend it on any mortgage of any real estate that you bought after February 15th of 2020. So that's the mortgage payment that you can't pay. You can't go out and buy a new theater and then use this money. And you can't reloan the money. You can't give it out to another entity, or you can't use it to make political donations. But other than that, we've got a wide range of allowable expenses. The Small Business Administration is definitely going to be and is tasked by the law to have a high degree of reviewing of the use of these grants in order to determine any fraud, non-compliance, or funding that was misspent under the terms of the law. So you are going to need to retain moving forward 4 years of employment records, as well as 3 years of any other records after the receipt of the grant. So, so be prepared. There's going to certainly be a good, hefty amount of reporting on this, or we expect that there very well may be a good amount of reporting on this. So you have to make sure you've got a good records retention policy in place. So a few other things before we dive into questions. Going back to touch on that NEA and NEH funding, like I said, each of those entities now for fiscal year 21 are funded at $167.5 million, which is a $5.25 million increase. And here's the really important part. All the fiscal year 21 grants from those entities can be expended for general operating support. And all of those project grants from both fiscal year 19 and fiscal year 2020 that you couldn't do the project that you got the award for, those can now be expended, or that can continue to be expended on general operating support. There's a saying that I say that project grants mean nothing in a pandemic because you can't plan for anything. And so the NEA is recognizing that, and so all that can go to general operating support. We've got some increased support for the Institute of Museum and Library Services, as well as Corporation Public Broadcasting. We're always really glad to see those in there. This is a great new program, $15 million additional dollars for the IMLS to produce a grant program to support American Latino museums across the country. So a real win for cultural institutions there. An increase of $500,000 to $30.5 million for federal arts and education grant program. So another great expensive dollars there. And the next time you go to Washington, D.C. and you're up on the mall, hopefully in the next few years, we're going to be seeing 2 new museums, which both of which got authorized. One is going to be the National Museum of the American Latino, and the other is going to be the National Museum of Women's History. I don't think that's not the official name yet, but that is the gist, is that we're going to see the American Latino Museum and the National Women's History Museum both up in the Smithsonian Institution on the mall. So some real wins. That's all in the fiscal year 2021 budget. A few other things about relief. This isn't first one isn't that important to us in North Carolina, because our state legislature and I think the three local governments that received funding spent all of the money that they got from the CARES Act. However, there's a lot of states that they have not. There's still several $billions that are out there unspent from the CARES Act at the state, local, and tribal government level. They now have gotten a 1-year extension, which is huge for some states. We're not thinking that that's going to be a big influx of cash. Also, there was a lot of debate of whether or not the nonprofit that got the funding has to go out and get it all spent by December 31st. You do not. So there's a reprieve there. There's no question anymore. That's been extended. I talked a little bit about this. It kind of reestablishes that $300 above the line charitable deduction from the CARES Act for 2021. It also expands it. It used to be only $300 per tax return. Now it can go up to $600 for taxpayers filing jointly. Not as big of a deduction as we had hoped, but still an improvement over where we were a week ago. So we're very excited to see that. Obviously, this is the sticking point with the president right now, is the additional money going out, $600 per person. So that's $600 for an individual, $1,200 for those filing jointly, plus an additional $600 for all children who are eligible dependents. Once the president signs this, we could be seeing checks and electronic deposits within 7 days. And there's some caps, obviously, about your adjusted gross income. It starts to phase out at $75,000 for individuals or $150,000 for those filing jointly. But that said, the president came out last night saying he wanted to see those at $2,000 a person, not $600 a person, and that he was threatening to veto this entire bill. Now, this did pass both the House and the Senate with a veto-proof majority, so it's very likely that even if he did veto, that the veto might get overridden. Nancy Pelosi said, Mr. President, if you want to increase that per person allocation of stimulus checks, we are happy to add that onto the existing bill and pass that. We'll do that as soon as you like. So some Democratic support for the president's move here, but we're still going to be keeping an eye on the news to see what the president will do with the bill and whether or not he will sign. Certainly, we're all hoping that he signs as soon as possible so we can start to see these dollars move out. And also additional $20 billion in EIDL loans, and also clarifying, there's a lot of this clarifying, the EIDL advances, which were not loans, but were actually kind of grants that were attached to EIDL loans. Some nonprofits took out. Excuse me. Those are not part of your taxable gross income. So again, we're kind of seeing that all that CARES Act money, the federal government is not expecting you to pay taxes back to them on the money that they put out to that they gave to you, basically, in one way or another. Just a quick note for those of you that are here in North Carolina, we got Arts Day coming up. We're going to be fully online, March 22nd through 24th. We're going to be splitting it up over 2 afternoons, so you're not going to be spending all day in Zoom, and we're going to try and keep it light and fast paced with lots of time for networking and bathroom breaks. We're going to have a great platform so that networking is really going to be able to be a little bit more seamless, and you can really dive into that. But we're also going to have the same great speakers from development, professional development, training, etc. But still, the focus of the event is going to be talking to legislators. We're just going to be doing that virtually or on conference calls and things like that. So prices are going to be going way down. We're it used to be at least $175 to come to Arts Day. Now it's $75 for the whole package, and only 5 days if you just want to do the individual. Just do the visits rather. And this year we're going to be doing merchandise, not only with Arts Day, but some I Vote Arts merchandise as well. So you can get the coffee mug or a t-shirt. And so we should be launching that in January. So keep an eye out for that. So that was my shameless plug for Arts Day as you guys get hopefully have some questions ready and I can answer anything about the relief bill that we just saw.
Okay, we have a lot of questions, and I just want to
Okay.
remind everybody that this recording will be up probably later this afternoon on our training and resources page. So if you want to go and listen to this again because you didn't catch everything Nate said, you will be able to do that. And like he said, the slides are already up, and you can download those and use those links. So let's go back to the PPP first, and take care of that. We have a question that says, if an organization did not apply for or receive a first PPP loan, is it still eligible for a PPP loan under this program?
Yes, as long as you are eligible for a PPP loan, then you can still get a first PPP loan. So they recapitalize it for both first draft and now second draft PPP loans. So and as I understand it, if you haven't gotten one, you don't even need to necessarily meet that the 30% loss threshold for your first PPP. You just need the old threshold, which was, is your business impacted by the COVID-19 pandemic. So yes, you are still able. So now that they've reauthorized it, it'll reopen and you can get your first PPP
loan. So another question about the PPP. Can employee expenses include those who are contracted as 1099 or just those who are W-2 employees?
That is an excellent question. So this is for the PPP. I would say I don't have the answer to that. I can look into it. I believe that it has to be payroll expenses, but I would have to dive into that. So if you want to reach out to me, I'm available at nate@artsnc.org. Ask that question. Also, in terms of PPP, it hasn't changed. So if someone claimed 1099 workers, if that was possible in the first round of PPP, then it would be possible in the second round. So that hasn't changed, but I would have to look into 1099 versus PPP. Sorry about that.
And then one more PPP question. Any word on the timeline for PPP loan forgiveness?
So technically they've already released that form. I know a lot of lenders have not gotten those forms out, and we're still waiting for that to be authorized. I think they were waiting for this bill. The bill specifically says that the SBA, as soon as President Trump signs the bill, as soon as it becomes law, the Small Business Administration has 24 days to get that other form, the form for the smaller entities out there. So obviously continue to talk to your lender, because they are the person that you've got to communicate with about forgiveness. They are obviously aware that this is an important part of the PPP, but we should be seeing those, for those that got the loans under 150,000, within the next month. Hopefully we're going to see that one pager go out, and it should really simplify the process for your lender to be able to get a portal or a form or whatever to you, to get that forgiven. So within the next month, 2 at the most, I think we'll be seeing forgiveness really moving through the pipeline.
Okay, hang on just a second. I'm answering somebody's question here. Now there's a lot of questions about this Save Our Stages Act, as you probably can imagine. The first one I'd like to say is, there's a question about community theaters.
Right.
Are community theaters not eligible because performers are volunteers, even if staff, teachers, and designers are paid?
Let's see. I wish I had 2 screens here. I would have to check the wording on that, and I don't want to necessarily dive through the bill right now. As I understand it, it is that performers and staff are done. Now, keep in mind that this is a bill, that this was written with some legislative intent, and a lot of times with bills, they don't necessarily get every last detail worked out. This is now going to go to the Small Business Administration that is going to work with the folks that wrote the bill, both the legislators and the staffers, and they're going to make sure that what the Small Business Administration puts into the guidance is what the intent of lawmakers are. It might be that we see some caveats about that you have to have so many paid employees, or that you have to, so that community theaters are sort of in this middle ground, right, where you might have paid staff and paid teachers, but not paid performers. So I'd say look for more SBA guidance on those as we move forward.
Okay, and for the Save Our Stages grant, where are the applications going to go? Are they going to be directly through the SBA, or are they going to be through banks as the PPP loans?
Save Our Stages will be 100% through the Small Business Administration. This is not a lender program. The administrator will be the Small Business Administration. They will set the rules. They will accept applications, and they will be, if not actually issuing checks, then telling the U.S. Treasury to issue the checks. So those grants are going to be completely done within the SBA, which will, because that certainly is going to help us. Obviously, one of the bigger problems with the PPP was that you had to go from a law to the Small Business Administration and then into the lenders. So now we don't have to go to lenders. These are grants administered by the federal government. These are not loans administered by lenders.
Great. Now, here's another question about the Save Our Stages Act. If you're a performing arts group but do not own a venue, would an organization still be able to apply for a Save Our Stages Act grant?
Yes. So if you are a performing arts organization that pays your performers and sells tickets, but you don't own the venue where you're doing the performances, as long as you're doing those performances at a venue that has a stage and an audience area, and that you meet and that your performances meet all of those guidelines, yes, you can get a Save Our Stages grant as a performing arts organization. You are a producer of the performing arts. You produce those sorts of performances. It is paying people. It brings in revenue. You're paying professionals to do it. You are completely eligible for a Save Our Stages grant.
And here's another one about being eligible for that. For the 70% earned revenue, does ticket admission charges include venue rental fees? I know a lot of theaters rent their spaces out. This person has a small theater that rents space when it is not being used, so the fees account for a good portion of earned revenue. So does that count towards your eligibility?
Actually, let me back up to that slide, because I want to look at it, but I think so the wording does say something along the lines of, oops, wrong slide. Here we go. So production, so the 70% earned revenue from tickets or admission charges or production fees or reimbursements for live events. So I believe that those would, that rental fees might count. It's a little hazy. I did not specifically say rental fees. So I think that's something to keep an eye on for the SBA fees. But I also want to say, though, that technically those rental fees are coming from live events, right? So there's fees being paid, or the tickets are being bought for the live events that are happening in your space, and then the rental revenue is then coming to the venue. So I would imagine that would be able to count. But again, that's part of that what we're going to have to tease apart from the language that as the Small Business Administration dives into that.
And we have a couple of questions about the timelines of all of this, about when the 14-day periods for those start and end, and how does this compare with the PPP? Do people need to wait? How long would they have to wait to apply for Save Our Stages at the cost of possibly letting the potential second round of PPP go?
Right. So I'm not going to lie to you. I don't know the answers to a lot of these questions because a lot of this is going to The same way that I can only tell you what unemployment is going to do, what the law says and what I'm reading, the Department of Employment Security is going to actually interpret and implement it. The same with what the Small Business Administration is actually going to be doing with the Save Our Stages grant. It will be one entity, so you can keep an eye on the Small Business Administration. Obviously, I'm going to be tracking that. Arts North Carolina is going to be tracking that. Americans for the Arts. There's going to be a lot of professional organizations that are going to be keeping a close eye. We'll let you know as these things come up. Technically, as we've said, this is still not a law yet, so it's impossible for me to know exactly what kind of timeline we'll have when SBA is going to make those grants available. As I understand it, I do not think that, I believe once they open up for applications, my understanding is that you will be able to apply as soon as applications are open, but then awards will be given once they start making awards for 14 days and then 14 days in the priority period. And then they will get to those that don't apply for the priority period. So that's my understanding of how that's going to work, but we're still waiting on SBA guidance for a lot of the specifics on that, on the timeline specifically.
And here's a question about if you've gotten a PPP grant, does that count towards the total gross revenue to determine your priority in that initial grant order?
No. PPP grants, no CARES Act money whatsoever is counted for your revenue calculations. So you don't have to worry about that disqualifying you because it made up for a loss. That you pull all your CARES Act money, whether or not it came through the North Carolina Arts Council, the NEA, the PPP loan, EIDL. Well, EIDL is a loan, so that's a little different, but an EIDL grant. All of that money that would be either forgiven or is a grant or that is that you don't have to pay back from the CARES Act does not count as revenue as you are counting your both earned, obviously, or it doesn't count as revenue as your gross revenue either. It's completely removed.
And then there was also a question of somebody was asking for clarity that they must have lost at least 70% or 30% of revenue. Does this include the donation revenue that many nonprofit arts organizations receive?
Yes. So yes, specifically that you would. So in order to be eligible in the beginning, right? So in order to be eligible, you have to. It's earned revenue, right? Only for your eligibility, you will have had to have lost your gross earned revenue to lost 25% to be eligible for the whole thing. But when we move to the priority, that is your total gross revenue, which does include donations, right? So I mean, I know that this priority does not advantage nonprofits. It's a disadvantage to nonprofits because even if you've lost 100% of your earned revenue and your ticket sales, you've got your donations and your other contributed revenue that might work against this, but that's the way it is set up, specifically because a lot of those for-profit entities simply could not access donations. So that's the priority, and so your donations would possibly keep you out of that. But your CARES Act money would not count from that. So if you got a grant through the $9.4 million that we got earlier in the year, and that came through the North Carolina Arts Council to you, or came through the Arts Council to your local Arts Council and came to you, that would not count in your gross revenue, but donations and other types of grants would.
Okay, and what are the revenue restrictions for the third priority, the third level priority that's after the 28 days?
So, right, so the third level that after the 28 days, that's all eligible entities. So you would have to have lost just 25% of your earned revenue, right? So you're already in the eligible pool if you've lost 25% of your earned revenue, and now you're eligible, and that's what that last 28 or after the 28 days, for those folks that haven't lost 70% of their gross, everybody else is then awarded after the first 28 days. I do not know. It doesn't specifically say how they deal with priority if the money runs out, right? Is it first come, first serve or anything like that? It's very hard to say. We've never had, $15 billion to spend on grants in the industry like this. So it's not an exact science of what is going to be left and how much is needed, et cetera. So we don't know whether or not it's going to run out or whether or not there's going to be some left over, but and how much is going to be left over for those additional supplemental grants. And it did not specifically address that if we run out, how that priority is made. I would say that it's probably a good idea at this point to start pulling together. You know when the periods are going to be, what quarters you can look at, what you need to compare between 19 and 20 to get your gross revenue, to calculate your earned revenue. Go ahead and get those numbers together so that once those applications are open, that you're ready to apply as soon as possible. Because obviously, if there is some sort of pecking order as to who applied first, then earlier is better than later.
Well, here we have a throwback here, another question about the PPP.
Sure.
If you haven't applied for forgiveness yet for the first PPP loan, and I think that's pretty much everybody.
Yeah.
Will that affect the second PPP application process?
Not at all. No. So you should be able to apply for as long as you've lost 30% in a calendar quarter between 19 and 20, the same calendar quarter between 19 and 20, and can show that, then you should be able to apply for a second PPP. And we should see those applications going out to lenders and hopefully that turnaround happening relatively quickly. It's my hope that the Small Business Administration gets those applications, gets the guidelines out and answers that questions about Save Our Stages versus PPP, so that will help to inform that decision about whether or not you're going to be going after a PPP and then a Save Our Stages, or whether or not you have to forego the PPP loan to go after the Save Our Stages. So we're going to be keeping a close eye on the Small Business Administration in the weeks to come.
And also somebody was asking if they can apply for them at the same time and then return the PPP. But of course, we don't know that yet. That's another one of those, right?
Yeah, it is not, at least in my reading of the law, with my degree in lighting design, and of course, years of doing performance contracts, in my reading of the law, it does not specifically address that. But that said, the law itself is 5,500 pages long, so it's entirely possible that there are things that I simply don't know, that I haven't found yet, and we'll continue to update. Also, I'm going to be continuing to update the blog post that we put out yesterday. I'll keep using that page to put new information as I find new things or find a better way to word it or become more accurate. So I'm going to try and keep that up to date. So it might be a good idea to continue to go to that site for nuances and to double check things as we go forward.
And yes, just want to remind people that the blog posts are listed both on the front, the most recent blog posts are listed both on our front page, and also the ones that are COVID-19 related are on our COVID-19 resources page on our website. Now, there's another question here that doesn't have anything to do with other Save Our Stages or PPP, and it's about how likely is it that there would be later relief for local and state governments coming from Congress?
I think that the answer to that question is in Georgia on January 5th. Is that so currently there are 48 Democrats or Democratic senators in the U.S. Senate, or independents that caucus with the Democrats. There are 50 Republican senators. There's a special election being held in Georgia where there are 2 incumbent Republican senators that are up, that has to go to a special election because they didn't get 50% of the vote, that have Democratic challengers. So if the Republicans win one or both, but I only need one, they will have either 51 or 52 seat majority in the United States Senate. They will, and that will give Mitch McConnell make him the majority leader and whether or not Democratic legislation, and like I said, it's the Democrats that really want to see the funding for state and local government. That'll give, it's going to be very difficult for them to do that if Mitch McConnell and the Republicans are running the Senate. That said, if Democrats can win both those seats, both the seats in Georgia, that'll be 2 more Democrats into the US Senate. It'll be a 50-50 tie. The tie goes to the White House, the vice president. It'll be Vice President Harris at that point will have the deciding vote. And theoretically, she would vote with the Democrats and caucus with the Democrats. And henceforth, that it would be Democratic control, and we would be able to see probably more legislation move through the Senate. That said, as you probably noticed, parties are not always voting blocks, so it doesn't guarantee anything, but along party lines, you would have a 51-50 vote threshold, which could very likely move through more relief legislation to cities, counties, and states and tribal governments.
And I think all the other questions were answered kind of after they were asked in the slides. As you guys know, the slides are available on the website. Right now, they're on the COVID-19 resources page next to the announcement for this. But when the video is available, probably later this afternoon, they will be posted right under the video. So a lot of these, and we know this is really complicated information, so please make use of the slides, and you're welcome to rewatch this video as many times as you like and share it with your colleagues.
And as we move forward, there will be more and more resources available, not only at our website, but there's going to be other entities and lawyers and things kind of teasing these things apart. We'll keep an eye on that as well. But keep an ear to the ground. It is. I mean, yes, this is all written in the law, but as I've said several times, it's a interpretation game at this point. We're still waiting on several answers from the SBA, and more to come.
Well, there's one little more question that popped up, and this is kind of a thorny question, which you probably are not going to know the answer to. Does gross revenue calculation include the investment earnings on endowments?
Yes. Okay, let me say this. I'm not 100% sure, but I would presume that it does, that it would, I would imagine that gross revenue would count anything that it is counted as your gross revenue on your 990 minus CARES Act money, which is in no way will be counted as your gross revenue, which is what this law clarifies. So if your 990 shows your gross revenue as inclusive of that money, then I would imagine that it would count as part of your gross revenue as well.
Okay, I think that just about covers it, and we're right about at the end of our hour now.
All right.
So Nate, do you have any other final words?
No, I just want to say, everyone, this has been a very trying year, and I really appreciate all of you that have stayed with us and all the words of support. And I want to thank all of our members and all of our sponsors, of course, and to wish everybody a very happy holidays over the next few weeks. It's really great that we're going to see this, hopefully, if the president signs, we're going to see this legislation at the end to sort of give us a little hope as we head into 2020. Obviously, vaccines are rolling out now. We know there's a light at the end of the tunnel. We know that it's not tomorrow and it's not the next day, but that we have some potential to start coming back from that. So continue to stay tuned. I really appreciate your support, and I'm looking forward to a few days where I don't have to shave. So thank you all so much for coming out, and have a fantastic day.
Thank you everyone for coming.